So during February we saw resources were up close to 7%, banks off close to 8%. There's a big outperformance of resources versus banks. Is this an inflection point between these two big industries?
I think it's too early to call an inflection point. We've certainly seen the bulk of the declines are out of the way, so the dramatic price declines are past us, and we're certainly seeing some volatility up and down now in resources around what might potentially be a bottom. So there's certainly some early signs that we could be at a bottom. I think it's too early to definitively call an inflection point. We'd like to see the commodity complex across the board show signs of bottoming and start to rally. We've certainly seen signs that in gold, iron ore, oil, and potentially zinc and the like, and even Dr. Copper a little bit. So there are some signs there, but I think to definitively call a bottom in resources, I think we need to see a bit more time pass.
And do you have a short list of companies that you'd like to own when we feel we hit that point?
We certainly do. We've done enormous work over an extended period of time in the resources space. We have actually started just toe dipping on 3 companies. We've added a few Woodside shares to the portfolio, a few shares in South 32, and we've been out of BHP, Rio and FMG since May 2014. We've just put our first handful of BHP shares back into the portfolio. And look, we think we could possibly be moving a bit early, but often these moves happen quite quickly, and so we don't mind having a bit of exposure ahead of the move, ahead of the curve, and then build the bulk of the position once we've actually had confirmation that things have bottomed.
And what was the point where you decided from being out of BHP to coming back in? What pushed you over the line to start accumulating?
Look, a couple of things. Firstly, we saw that the underlying commodity price was starting to rally itself, so we're getting a bit of confidence there. We're also starting to see a bit of rhetoric soften in terms of supply side expansion. South 32 is a great example. They've really led the pack in terms of saying, hey, we're not going to produce something for the sake of producing it. We're going to produce something where we can get the best economic return. Good example what they're doing with the manganese in South Africa. So, we're starting to see a bit of that soften and talk about more supply side restraint. And also, look, the valuation and the share price, the way it was starting to bounce up and down, getting the big swings 5 to 8% a day, or every second or third day, that's again typical of a bottom as opposed to a decline where it's just down 5%, down 3%, down 1%, etc. We're starting to see now investors thinking this could be the bottom and starting to position themselves for that.
And what was your reaction to the change in stance on the dividend policy?
Well, as you might remember from our interview last year, we saw it as being completely inevitable. What we're disappointed about is the lack of discipline that these resource companies exhibit through the cycle. And what we'd much prefer to see is that during buoyant periods, that they do, for example, what we're seeing in the US with Apple, where they build up cash reserves, that during the inevitable downturn, they're well equipped to make good acquisitions at good prices. I mean, now's a great time to be flush with cash and be able to step into the market and pick up some undervalued businesses. But of course, the majors, from the international groups down to the local ones, aren't in a position to do that.